Hello and welcome to the show called One Step. Let's talk about the journey. I'm your host, Joel Bennett. And today we have a fascinating episode for you as we dive into the world of mortgages in Canada. So whether this is your first time purchasing a home, looking to refinance, or simply curious about how the mortgage industry works in Canada, this episode is for you. We're joined by Oral McLean, a seasoned mortgage broker with numbers of years in the industry. Oral has helped countless of Canadians navigate the often complex process of securing a mortgage. Welcome, Mr. McLean. Man.
Thank you.
Finally. But this guy is one of the busiest persons I know. Yes. But I do appreciate you coming on the show, sir, to grace One Step podcast.
Yep. Good things come to those who wait.
And I do believe that some awesome things will come from the show, Oral. And so it's always worth the wait, right?
Definitely.
So before we get into the script, Oral, usually with my guests, I like to throw out a little icebreaker just to relax ourselves, get our minds in sync with the deep discussion. And I have one for you.
All right.
If you could give your 10-year-old self one piece of advice about money and home ownership, what would it be? I know my icebreaker questions always get my guests free for a spot there.
Oh my god.
Your 10-year-old self.
Okay.
Your 10-year-old self.
Well, here's the fascinating thing.
Yeah.
About going back more than 40 years and basically giving advice to my 10-year-old self.
Yeah.
In this case, I wouldn't be giving advice. I'd probably hand out a lot of kudos.
Yes.
First, I would probably hand out kudos to my parents who set a very, very good example when it came to ownership.
Yes.
and handling money. My mom was the CEO.
Yes.
She was mostly a stay-at-home mom until she started her own little cottage industry and, had more money coming in.
Yeah.
But when I was growing up, my parents never paid rent.
Okay.
They always owned. Wasn't a castle,
okay,
but they owned it.
Yeah.
Right? And we were encouraged to save. And so, I had one of those building society accounts. Won't say the name of the building society, right?
Yeah.
I had one of those building society accounts from when I was about 7 or 8.
Probably guess.
Yeah. Right? From when I was about 7 or 8.
Yeah.
And so I give kudos to my parents there, right? For the example that they set.
Yeah.
And when I look back, I'm happy for the time and the era in which I grew up.
Okay.
Because then we didn't have a lot of video games. We didn't have the internet.
Yeah.
So we had to use our very active imagination in order to entertain ourselves.
Yeah.
And what we used to do, we used to play a thing called Dolly House.
I remember Dolly House.
Yes. And all that was you taking the examples that adults set and you basically, with your imagination, try to mimic or improve what they did. So you'd have a wife, you'd be the husband, you'd have a wife, you'd have kids, and you guys are just make believe and you're just role playing, and it's nice and smooth, right? And in that process of providing our own entertainment, what it really did, we were role playing, and that role play became a part of me.
Yeah.
Right. Because I was role playing. I had to be a businessman. I wanted to be my own boss. I wanted to call the shots. And in Dolly House, you're gonna own a home because it's make believe, right? But we bought into it so much
Yeah.
that it became a part of me, right? So once I went through high school, went to university, found the girl of my dreams, and all of that, home ownership was on the cards.
Yeah.
But then, after owning for like 10, 15, 20 years,
Yeah.
you move countries and you come to a new country.
Yeah.
And we we did what was unthinkable. We started paying rent.
Oh, really?
Yeah.
So you didn't start on owning then?
No,
Okay.
we started paying rent.
Yeah.
And we did that for almost 2 years. It was probably the most difficult 2 years that we...
Because that's not something you had thought of.
No, that is like throwing away your money. That's how we thought of it, right?
Okay.
Because it was just not a part of us.
Yeah.
But yeah, I would tell my 10-year-old self, yeah, you're on the right track. Keep it up. I'd probably put in a few little notes to improve it, right? Speed up the process and all of that. But at 10, I think that was what I could expect. Yeah. So I'd probably pat 10-year-old me on the back and say, good job, keep it up, and you're going to be great.
So you knew from then that, when it comes to what you place value on, that's kind of where your focus would have been from day one. Because in those games, those childhood games, that is, you knew owning something and buying something of value was important.
Yep. And I was going to have 2 kids, and they were going to go to...
You that too?
Yeah. They were going to go to prep school. They were going to do this, that. I had it all planned, right? They used to use it to tease me.
Okay.
Right?
Okay.
Yeah, because when I was 10, right? Mm-hmm. Back then in Jamaica, if your kids went to prep school, it meant something, right?
Yeah. Oh, you're rich.
You were
off.
And you're investing in their education and all that. So I knew from then that you do this, you invest in education, you invest in stuff like property in order to put roots down. Yeah. So I had a concept. Yeah. So I'd probably tell my 10-year-old self that, listen, you're not using your active imagination. Yeah. You're a visionary. Mm-hmm. Right? So that's what would happen if I went back to tell my 10-year-old self. Plus I'll tell my 10-year-old self that, boy, you have such a beautiful smile. The girls are gonna go wild over it.
I like that, Oral. I really do like that. And I'm surprised too that I wouldn't have expected that at that younger age you would have that futuristic outlook for your life. And where you're gonna be putting value on your money, and that's good. Yep. That's interesting, man. So let's dive into the meat of the matter. To start things off, Oral, can you tell us a little bit about your journey? How did you get started as a mortgage broker, and what inspired you to enter into this field, this endeavor?
All right, so this might be unpopular, but I'm motivated by money.
Who's not motivated by money?
Right? But again, along the process where we were doing traveling our journey to move now from what was a culture shock for us, paying rent after we owned for so many years, and we wanted to get out of that. I had some experiences. Some of them weren't very pleasant. Okay. Right? Because my wife and I, we saved very hard. We worked very hard. Yeah. And my wife, she changed career. This was her 3rd career change. Yeah. And she was doing something that she wanted to do, right? Okay. So I came to this country and I was not able to break into the field that I wanted to, where I've worked, done a lot of training, done the education aspect. Yeah. I have more than 10 years experience, basically self-actualizing in your career. Yeah. And then you come and you start over and you realize you can't even break in. Oh. So then I did odd jobs, anything to feed the kids and to keep the family happy. Yeah. I did it because, listen, as long as you pay me, there's nothing that is demeaning about getting paid. Of course. Putting in an honest day's work for a dishonest day's pay. I mean for an honest day's pay.
Okay. I won't even get to that, but I hear you.
Right.
Yeah.
So we went to one of the big 5 banks.
Yes.
And after we saved a lot, we tightened the belt and we really put in the savings. So we had a down payment.
Yeah.
My wife monitors our expenses so much, and the credit part was down pat.
Yes.
Right. We had the income. We had what we thought was everything.
Which province were you guys in at the time?
Alberta.
Okay.
Yeah.
Okay.
We had everything down to a T.
Yeah.
Went to the big 5 bank, and we wanted like 350,000 to buy a starter home.
Yeah.
And they said no.
3
months later, we went back, and they said no.
Did they give you guys a reason?
Yeah, you just came, settle down some more. Yeah,
Okay.
maybe in another year or 2, then come back.
Yeah.
Right? So we went to a broker, because where we're coming from, you just go to the bank, and because we don't have mortgage brokers back home, so you went to the bank.
Yeah.
Right? You thought that was the thing to do. So we went to a broker, and we were shocked. The broker looked over our stuff, and he said, you guys will be able to qualify for 750 or 790,000.
Okay.
And we were saying, but we were asking for 350, and we weren't able to. The big 5 bank said no. The guy said to us with so much confidence, the guy said, listen, if I tell you that you can get this amount, this is the amount that you can get.
Okay.
And
this is the broker.
Yes. And we didn't take all of that, right? But we then looked not at a starter home, and we looked at what could be the dream home, and we got that. And it got me thinking, right? One, the feeling that I had when I was told no twice by the big 5 bank was a feeling that nobody should have. It was heartbreak. It was devastating.
Yeah.
It took me months to get over it, right? And I'm somebody that water can flow off my back like a duck.
Yeah.
And it took me months to get over it. So I said, that feeling, never again.
Yeah.
Plus, I wouldn't want others to go to experience that.
Yeah.
Plus, I was doing work that I did not enjoy. I just did it for the money. And listen, no problem doing it for the money.
Of course.
But sometimes you want to have that adrenaline rush in the morning just because you're getting up to go to work, right?
Yeah, very true.
And that wasn't there. So I said, this is something that I could do, because along the process, there were all the things that the broker wanted and all that. I was on top of it. I, delivered it with greatest of efficiency. And I was thinking the process along.
Okay.
And I said, but this is something that I can do. So I went and I did some research, because real estate is in our family DNA, right? Because my wife and I, we have had like rental properties from when we were back home, from before we had all our kids. So it was something that was sort of in our DNA. So we said, listen, we have always been in real estate, and why not real estate?
Yeah.
So I looked at the industry and what are the different roles that a professional can play. And I said, listen, I could become a realtor. But then, remembering what one former prime minister of Jamaica said, it takes cash to care. And if I wanted to show people that I care, I need to get them the cash.
Yeah, for sure.
So I narrowed it down, even though realtors will probably make more money on a transaction.
Yeah.
But I think that I have more impact.
Yeah.
Because when I looked at it and looked at my own situation, I said, if I can deliver, or at least play a role in delivering this feeling that I'm feeling when I got approved, and I know, we are going to buy the house and we can do the stuff that we want to do with the family, and, the foundation that is going to lay. If I can deliver that feeling to people on a daily basis, then I know that, one, that will be fulfilling, and two, I'll make a living doing it.
Okay.
So that's where I went. And I did the research because I'm big on research.
Yeah.
So I did the research and I found that, it's something that I can get into fairly easily. And I took on the challenge.
So did you have to go back to school to pursue these studies? Like what did that look like?
All right. That was, should have been 1 year.
Okay.
And that is done at your own pace.
Okay. Self-study.
Right?
Okay.
Right. So that's what I did. And I did it in less than a year, even though I had some obstacles, because listen,
Of course.
this is life. It's not gonna run nice and smoothly. COVID came and I couldn't get to do my final exams and all that.
Mm-hmm.
But luckily, I put myself, and planning is so important in everything that you do. Yeah. I'd put myself in a position where the moment I decided that I was gonna do it, I contacted a brokerage, and I did my research and I looked at all the brokerages, and even the one that had gotten me my mortgage, and I looked at them and I didn't go with them, right? Okay. Because I saw another brokerage that had the right sort of approach that I'm thinking, this environment is an environment that I should be able to flourish in. Yeah. And while I was doing the course, I was going to their meetings, getting to be a part of the situation, learning while I'm really learning now while I'm learning. So while the theoretical aspects I was getting that, I was getting the practical stuff, people coming in, case conferencing, discussing difficult files and, what are some of the
hands-on stuff.
Exactly.
Yeah.
So I had that going for me, and I basically completed the course in a span that was shorter than expected. Yeah. And all I had to do was just wait on the final exams when I could do them because at that time it was just as COVID started. Yeah. And I couldn't, nobody was going anywhere and you couldn't go. And I had to set my exam where I'm the only one in the room and, things like that.
Thank you for that. Thank you for that, Oral. Now, could you explain the role of a mortgage broker in the home buying process? And this is the part that is actually most persons are probably listening for. Okay. What value do you bring to clients compared to going directly to the banks? I guess it's a comparison between the broker and the banks.
All right. Well, I'm biased, but it's not even close.
You have to.
It's not even close. Yeah. Because here's the thing. And this is fundamental, right? When you break it right down to the bare bones, fundamental is this. When you go to your bank, and you sit in front of that rep at the bank, whether they call him a mortgage specialist or whatever name that they give them.
Yeah, we're getting into that too.
Right. They are an employee of the bank, and there's a legal relationship.
Okay.
The relationship is, they have a fiduciary relationship to the bank. Yeah. Meaning they have to look out for the bank's best interest. So anything that they do must be in keeping with the bank's best interest. Yeah. Every time, all day, every day.
Yeah. Okay.
So when you go to the bank and you sit in front of that person represents the bank, does not represent you, does not look out for your best interest. When I work for you, you notice I say I work for you.
Yeah.
I have a fiduciary relationship to you to look out for your best interest. So I'm thinking, if I'm legally bound to look out for your best interest, and the bank is not, why would you go to the bank?
It's very true.
Plus, when you deal with the bank, you deal with the bank on their terms. So they open at 9 and they close at 6 or 7, Monday to Friday or Monday to Saturday, right? But take, for example, if you're say a nurse and you work night shifts. So you work in the night. And
which I hate.
But a lot of people have to do it, right?
I know.
Right. So you work all night and you sleep all day. You get 1 day off. You now have to make an appointment to go to your bank at a certain time in the day. You are doing this 5-6 days a week. It's a regiment. You want to come out of that regiment, right? If you're dealing with me, I know that you're sleeping all day and you're working all night, right? Yeah. So I can set my schedule around your schedule.
Okay.
Because you're important to me, right?
Yeah.
The bank is not going to do that. I can do that. So I have the greater flexibility.
Yeah.
I have more convenient hours, and I make it easy for you. Plus, I will come on your turf.
Yeah.
So I'm gonna do it around your schedule to make it as convenient as possible. I will come and see you, and I make it super easy.
So it's more personal.
And it is.
From your knowledge, Oral, because I'm sure persons are gonna be thinking the same thing. What's the difference? A basic breakdown of the difference between the broker and the bank mortgage. That's what they call themselves, mortgage specialists.
Yeah.
Right? What is the difference in a nutshell? I know
right.
you touch on a lot of the points just
All
now.
right. So in a nutshell, a mortgage specialist is a misnomer because I am a mortgage broker, but I am more a mortgage specialist than the mortgage specialist. Because here's the thing.
Yeah, tell us about that.
All right. So the bank does deposits, it does investments,
Yeah.
it does mortgages, it does credit cards,
Yeah.
so many things, right? So that's more like a general practitioner,
Okay.
right?
Okay.
I'm a mortgage specialist. I do mortgages. I specialize in mortgages only,
Oh,
right?
Okay.
So
the mortgage specialists at the
It's
bank,
not
they don't
really-
just focus on mortgage, you're saying?
well, they do, but they work for an organization that focuses on everything else.
I see.
Right? So the thing is, and this is the greatest one, the biggest disadvantage that they have is that they are restricted to the products that organization provides.
Yeah.
And, no organization can be all things to all men.
Yeah.
So they're going to have products based on the bigger objectives, the greater goals of the organization, right?
Okay.
And their policies are going to be in keeping with that.
Okay.
So I'm a broker. I deal with many lenders.
Okay.
And notice I'm not saying a bank, no, right?
Yeah.
I call them lenders.
So you have a pipeline to
Right.
various
So
lenders.
I have a pool with if you want a mortgage for thing number 1 or thing number 2, you want a mortgage that is more geared at persons who are doing investments or house flipping. While most of the big 5 banks won't provide you with a product that is fine-tuned or tailored to that particular thing, I can find one provider or a lender who will specialize in that. So you come to me, you get the opportunities greater that you'll find what you're looking for, or I'll find you what you're looking for, because I can then shop around and get the best thing that is fine-tuned to your particular need.
I have quite a number of friends that have purchased home, and I don't really know of anyone that went through the bank. It was a broker that they use. Nothing against the banks, okay? We're not here to attack the banks. I'm just saying, I don't really know of anyone that went to the bank. They more went to a broker.
And I guess a couple of people still do, right? I'm sure
they are. This is just my limited knowledge now,
Yes.
I'm just saying friends and associates that I know. I'm not, we're not attacking the banks here, okay? So please, let's stand correct on that. I'm just saying that most persons I know, they went through a broker.
And that's the best. That move is prudent.
Yeah.
Because you don't want a general practitioner doing an open heart surgery.
Definitely not.
Right? No, you want a surgeon.
I want a specialist.
Exactly. Exactly.
Yeah.
So just dressing up a name and call it specialist, that's not really a specialist. Doesn't really do it. You want somebody that eats, sleeps, and breathes mortgages.
Yeah.
Right? You want somebody that is always up to date on what is happening with a wide array of lenders who lend for different purposes and different reasons.
Yeah.
Yeah. So your friends, and they say birds of a feather flock together. Wise decision by your friends. I hope you didn't go to the bank.
I did the very same thing too, man. And that's what I'm saying. This is just my tiny brain with the handful of friends I have, just making a basic comparison. So the comment section, hey, you attacking the no, we're not doing that.
Definitely not.
So Oral, for those who are new to the world of mortgages, could you break down the basic steps in the mortgage process itself? What should a first-time homeowner expect?
A first-time home buyer?
Yeah.
All right. what is to expect?
Yeah. Term.
All right. If you love roller coasters,
And I don't.
it's gonna be a great ride.
Yeah.
Even if you don't.
Yeah.
I don't love roller coasters, but the process can be have its ups and downs.
Yeah. As is expected.
100%. And I'm not a baker, right? So I'll never sugarcoat.
Mm-hmm.
However, it can be exhilarating. It can give you that adrenaline rush.
Yeah.
It rises you, and it will keep you there if everything goes well. If things doesn't,
which it normally don't.
All right, but here's the good part.
Yeah.
I tell my clients every time.
Yeah.
I define the roles. I say, all right, your role.
Yeah.
Your role is to tell me what you want in terms of you're gonna be doing this with your realtor, that with your realtor. You're gonna be buying in this price range and all of that, right?
Mm-hmm.
That's your role. 1. 2. You're going to provide me with the necessary documentation.
Okay.
You're going to tell me everything.
Okay.
Right? All the weaknesses, all the strengths, you're going to tell me.
Okay.
Right?
When you say weaknesses and strengths, I'm trying to get to the bare bones here.
All right. And I'm going to go to bare bones, right? So that's their role. My role is to worry. So your role is not to worry.
Take all our stress.
All right. All right. So that's my role.
Yeah.
So if I take all of that, no matter what happens, right, you're going to have a good ride. Plus, I go one step further.
Okay.
And I tell them, so listen, when you're working with me, I'm going to call you. When I call you, I will have either good news or we have something that we need to fix.
Okay.
So I never call you with bad news.
Okay.
Never.
Okay.
We just have something we need to
like
fix.
the soul of that.
Right?
Yeah.
So that's the approach.
Mm-hmm.
So what are they to expect? All right. So one is that, and this is what a lot of people don't understand, is that a lender is going to give you anywhere from $100,000 to $1 million so that you can go and buy a property as a mortgage, right?
Yeah.
Maybe even more.
Okay.
So you're going to expect that they're going to want to know who you are.
Okay.
Really know you.
Yeah.
Right? So some people will say, boy, they're asking too many questions and it's too inquisitive. And I said, listen, if somebody comes up to you and is borrowing $100, if you don't know them well, you're not going to give them that $100, right?
No.
So they're going to need documentation to prove or to verify anything that we have in that application.
Okay.
Right? So an application is the first step is me and that prospective client having a discussion as to where they are and where they want to go.
Yeah.
Right? We do an application in order to gather all the information. And then when we gather the information, we want documentation that we can use to prove that what is on paper is actually what is the reality.
Okay.
After we have all of that set, we're going to look at income. We're going to look at down payment. We're going to look at credit. We're going to look at the overall stability of the client.
Okay.
We're going to look at the property, whether it's marketable, whether it can, because the property has to qualify too.
Yeah.
Right? So we're going to look at all of that. So after we look at that and we can meet the requirements that the particular lender has, or we'll look at a lender that will meet that those requirements will sit well with, then we will submit that application. When we submit that application, we cross our fingers and we wait. I tell my clients every time, your application is submitted, cross your fingers.
Okay.
Because I've come to learn that there are no slam dunk files and there's no sure thing.
Yeah.
Right? Anything can happen. So we cross our fingers. The lender will send us an approval, or they'll probably give us a call. And based on the relationships that we have built over time, they'll probably give us a call and say, all right, this weakness, we have a problem with that or that. However, if you can provide us with something else, then we can probably go forward. And that's when I'd call the client with something to fix.
Okay.
Right? If we're declined, then we will know what it is that caused that, and we can always fix that going forward.
Yeah.
Right? After we get the approval, the lender then goes through all our documentation and they tick those off. And if they are satisfied, let me just backtrack a sec.
Sure.
Our initial approval is a conditional approval.
Yeah.
Meaning that there are conditions. So they'll have 4, 5, 10 things, maybe sometimes even 15 things that it's all right. You need to prove this, that. We send them the documentation, they take them off one at a time. It's proven. Then now we have a firm approval. At that stage, it is said that we are broker complete. So basically our job is almost done.
Okay.
What we're going to do next is just walk the client along the rest of the way. And this is now when the file goes over to the lawyers, and the lawyers have to tick off their conditions. We walk them through. We make sure that we give them a heads up. And this is the biggest part of what we do, right?
Yeah.
We not only manage the expectations, and how we manage expectations is through communication, providing information, giving the client a clear roadmap as to what is going to happen from the start to the end. And while we're walking that journey, we're reminding them that, all right, we just passed this milestone. The next one is going to be this, and we have to do that, and we have to do that, and we have to remind them not to go out and buy a new car.
At least not yet. So you keep the client in the loop.
Yes.
Through every step of
the
journey.
Every step of the way.
Okay.
And if any of your viewers want and they look at like my reviews,
yes,
that's a consistent theme, right? That it is communication all the time, giving the information, keeping them up to date, letting them know what is coming next.
Yeah.
Because that is crucial. Because listen, fear is not, you don't fear what you know.
Yes.
You fear what you don't know, right? And if I can give you an heads up or keep you up to date so that you know, then there's no need for fear.
Sure.
And if I can do that, then your journey is going to be nice and easy.
I'm going to ask you a probing question. And
Sure.
like I normally say to my guests, if this question is one that cannot be answered on air, totally understand.
All right.
What are some of the, not a lot, just what are some of the few main reasons you have seen in your journey in the business where clients have been rejected because there was this reason, the common ones?
Okay. All right. Common reasons.
Yeah.
Credit.
No, I could have guessed that for myself. What their credit status that is.
Okay. And when I say credit, a lot of people, when they hear credit, they think it's just credit score.
Okay.
But it's credit history.
Oh, okay.
Right? And credit history looks back from day one to now. Okay. There are some things that will come off your credit, and you might not see the full details.
Okay.
But there are still indications,
so
or indicators. Credit. Yeah.
Oh, okay.
So here's the thing. Persons will have like collections, late payments, bankruptcies, consumer proposals, and it will not stop you from getting a mortgage.
Okay.
But it will stop you from getting some mortgages. Because, all right, a client will come and the client will say, all right, I want to buy a property for $400,000.
Yeah.
I want to put 5% down. Right? You do the calculations, you look at everything, and you'll say to the client, because this is it. You'll say to the client that, listen, to get you 5% down, it's going to be difficult based on your credit.
Okay.
Client will say, boy, but that happened a year ago or whatever the case is.
Yeah.
But what a lot of people don't understand is that the moment it happens, yes, we can mitigate it in most cases, but there are some things that you just don't get over in a year or 6 months.
Okay.
Right? Plus, if we're gonna mitigate it, one of the things that we have to do is that we have to prove to the lender that this is something that has been dealt with and it has been corrected, and there are strategies that have been in place, and there must be evidence that the repair has been done and it's ongoing. But the main thing is that we have to prove it.
Okay.
Because the client can say, well, that was just a one-time blip. But we have to show it.
Yeah.
We have to show that, yes, it was a one-time blip, and yes, it has been corrected. Another thing is another thing is income.
Okay.
All right. So
when you say, okay, I'm going to let you go on. Go on.
No, man, no, ask that question.
So is there let me make this more simple.
Mm-hmm.
In other words, for some, they need to be earning a certain amount for an easy transition into getting a loan.
Yes.
Okay, I'll get you to talk about that.
All right. So income.
Yeah.
Somebody will come and they say, listen,
Yeah.
I earn $200,000 a year.
Oh, I wish I did.
Right? And that is good.
Yeah.
So you put that in and you say, all right, let's show me the documentation.
Okay.
Right? You get the documentation, and when you look at it, they earned $200,000 this year or last year.
Okay.
But based on how their job is and how that income will be or that income will be viewed, they don't.
Okay, can you clarify that a little bit more?
And I'm glad you made it very simple, because the question was simple, but the answer is not.
Oh, I see.
All right.
Yeah.
So, easiest way to put it.
Yeah.
You're part-time,
yes,
or you work seasonal, or you work your union,
okay,
stuff like that, right?
Yeah.
So you might have worked the last 3 years in a full-time position.
Yeah.
And when it's full-time and your hours are guaranteed, because it can be full-time, but your hours are not guaranteed.
I get you.
Because what the lender is looking at is that, this is historical data.
Yeah.
Will it continue?
Yeah.
Right? Another thing is that even if, say, you're full-time, and we submit that application, but when we submit your payslips, your year to date, when you track it back, you're not making as much as your annual income says. That's gonna be a problem.
Yeah, I can see that.
Right? So it's things like that, right? Yeah. Then I've had files that have been declined because of the property. So nothing to do with the client.
Okay, so it's like this isn't representing a used home now.
No,
or just any home.
No. I've had clients gotten declined for new builds.
Okay.
Because, and this one is very delicate.
Yeah.
Because there are some builders. That have been put on
the watch list.
Unfavorable list.
The watch list.
Right? Because in the past, they have built homes that are...
People have complained.
Massive complaints. Even though with new homes, there is a new home warranty. But if there have been problems and it has been numerous, then what happens now is that risk.
Yes.
Because mortgage broking is not common sense lending, right? Yeah, mortgage lending, not common sense lending. It's about managing risk. So if that builder or that particular complex or is a problem one, it now presents risk.
Yes.
You find though, most of the mortgages that get declined, it's not declined just based on the lender. It's declined if it's less than 20% down, and then there's a mortgage default insurance aspect to it.
Okay.
So that mortgage needs two approval. It needs one from the lender, who then sends it over to the insurer, who's gonna then approve it based on the level of risk that it presents.
Yeah.
And that's where you find a lot of the clients coming back.
Man, these are absolute gems. I'm learning here. I'm just saying, I'm learning here, and I'll probably be watching this over when it's all done. Okay, thank you for that, Oral. Yep. What are some of the common misconceptions now that people may have about getting mortgages in Canada?
All right, so main misconception is that you have to have a full-time job. No.
Oh, you really don't?
You don't. You don't.
I did not know that.
But remember, you can have a part-time job.
Yeah.
And if your part-time job, if your hours are guaranteed. So say you have a part-time job and in your letter, it says that you are required to work a minimum of 20 hours every week.
Okay.
I can use that in order to calculate your income. And it's easy now to calculate, right?
Yeah.
So that is almost like a full-time job,
Mhm.
right? Because your income can be calculated easy. We can verify it, all that, right? You can be like union, where you work like for 6 different employers in 1 year.
Okay.
But what we're gonna do is that we're gonna use a 2-year average, for your income. So you have to have some time under your belt, right? Another big misconception
Yeah.
that a lot of persons have is that one type of rate is better than another.
We're getting there, We're gonna touch that. Yeah.
That's a common misconception.
Yeah.
And it's not the case. Another great misconception, apart from the fact that people think that you must have a full-time job and one type of rate is better than the other, is that when it comes to down payment, your money has to be in your account for 90 days. It doesn't. What the lender wants is a history of that money, a 90-day history of that money.
You mean going in and out of the account itself?
No, they want to see what is that for the last 90 days. What has happened with that money?
Okay.
Right. So remember, in a lot of cases, a part of that money is coming from like your income. Right. So you're gonna say, I can't use the income that I earned last week to put in it. No, that can be used. However, we want to see it coming in, and the lender wants an explanation or the source of all large transactions.
Of course.
Because here's the thing. Real estate requires a lot of money changing hands.
I can imagine.
And that is a recipe for like money launderers to want to use it, right? So they want to see and they want to know where this money came from, right? And it is, a lot of persons get uncomfortable because people don't like to talk about money.
Because money is coming from various places.
Exactly.
Possibly.
Exactly.
Just possibly.
Exactly. But a lot of persons think that the money has to be there for 90 days. No, they just want a 90 days history of the money.
Here's one for you, Oral, before we move on. What if I live in the US and I've Canadian citizenship, but I live in the US? Can I still purchase a home in Canada?
Sure.
That's not a problem.
That's not a problem. There are things now that you have to do. Is it that you're paying income tax? Is it that you're paying taxes on that and that in Canada? Is it money that you have declared? Can we see a history of the employment? A couple of things that must be in place. But you're a Canadian. You can buy property in Canada regardless of where you reside, where you work.
Okay. Thank you for that one. Are there specific types of mortgages that are more popular or beneficial in Canada right now? How should someone decide which type of mortgage is right for them? And you started picking on that just
all right. So in a case like this, because there are so many different mortgages, so many. But in a case like this, you start looking at yourself.
Okay.
So marketers take a outside in look, clients take an inside out look.
Okay.
So you look at your own resources and to see whether or not they can match up with the policies that surrounds mortgage lending.
Okay.
So you're going to look at your income, and we go back to income. You're going to look at if you have your down payment. You're going to look at your credit, right? You're going to look at, so income, down payment, credit. You look at other sources of income because a lot of persons, and this is probably one of the misconceptions that I miss, a lot of persons think that income means that coming just from employment. No, income can come from other sources, like you can get welfare.
Okay, that is a considered factor too?
Yeah, like the Canada Child Benefit.
Okay.
That's
income.
That's income.
Okay.
You get some persons get monies from their pensions early. CCP, that's income. Certain types of disability, that's income. Alimony, child support.
Where's that income?
However, remember now, all you need is the documentation to prove that this is consistent and over time.
Okay.
Right? So So you look at all those things, right? Then this is the biggest part of our job now, right?
Yeah.
Managing expectations. Because when somebody looks at their personal resources and you say, all right, my income is X, my credit is Y, right? I have this amount saved, or I can, as it relates to down payment, or I can get a gift from like an immediate relative.
Okay.
That's mother, father, brother, sister, child, right? If I can get that, I can use it for down payment, and I don't have to show that for 90 days because I'm getting it now, right? Yeah. So things like that, you look at those, and then when you look at it, you're gonna see whether or not can match up to what the lenders are asking.
Okay.
So one of the biggest things when a lot of persons decide what mortgage to choose is the amount that they have to pay for down payment. So if you want to do an investment property, so you want to have a rental or so in a case like that, in most cases, the rule is that you put 20% down. There are exceptions to that.
Yeah.
Right? 20% down. So if you're going to do 20% down, you're going to look at down payment and see whether or not you can go with that.
Okay.
At 20% down too, you don't pay mortgage default insurance premiums. You don't pay it.
Okay.
But 19.999% you pay.
Seriously?
Yes. Right? And that can go as low down as 5%. So you're looking at whether or not I'm going to put 20% down or 5% down based on affordability.
Yeah.
Right? So that might be one factor that dictates what mortgage you choose. Then again, credit.
Of course.
Credit is going to be very, very important because now, and I'm going to jump onto another form of, another type of mortgage.
Yeah.
So like for newcomers, and this is what probably that Big Five bank should have done for me.
Yeah.
Right.
Yeah.
Because they told me that one of the main reasons was that, you're new to the country and all that. For newcomers, there are special mortgages for them with special factors, right? So you come, but normally for credit, we require that you should be on the credit bureau 222.
Yeah.
2 years, 2 lines of credit, and minimum $2,000.
I'm just wondering if that person was just inexperienced, or anyway, we're not going to stray too far from
right.
it. Yeah.
But for newcomers, they can choose a mortgage that is called a new to Canada mortgage.
Okay.
So you can come, you don't have the 2 years credit reporting.
Yeah.
But there are special factors, there are special circumstances, special considerations that are put in place where now we can use 2 other alternative sources of credit.
I didn't even know that.
All right. Yeah. 2 other alternative sources of credit. So if you're living here, chances are you're renting. We can use your rent payments as proof that for 1 year, you have been paying your rent on time, right? And we can get that if you pay through your bank or if you send e-transfers, and we can see the e-transfers going consistently on the first of the month or whatever that first day is, or we get a letter from the landlord that verifies that these persons have paid their rent on time consistently for a year, right? We can look at you have your mobile account. We can look at things like that. So you might not meet the requirement in terms of the 2 years credit, but we can look at other sources, right? And as it relates now to other types of mortgages, and this is one mortgage that persons always call and ask about. I want a mortgage, but I don't want to put any money down, 0 down.
Does that exist?
It does.
Oh, really?
It's called a flex down mortgage.
Can you just take this opportunity? Guys, hit the like. Oral is offering free gems, values here, and we do appreciate him for all of that. Did I cut you off, Oral?
No. Well, here's the thing. Here's the thing with the flex down mortgage.
Okay.
The flex down mortgage will allow you to put no money down.
Okay.
However, the money has to come from somewhere, right? So it's almost like you're getting a loan for your down payment.
Okay.
When you get that loan for your down payment, it's going to be debt serviced. And when I say debt service, I'm just going to use an easier term. We'll calculate it in the entire scheme of things to see, because that now is going to add to your debt burden.
Okay.
And your debt burden brings down the amount of money that you will qualify for.
Yeah.
Plus, when you do a flex down mortgage, you are restricted. You cannot borrow more than 4 times your annual income.
Okay.
Right? But you get it with no money down. However, flex down mortgage, your debt burden to start has to be very, very low. Because when we, and I'm going to use the word again, debt service, what we're really looking at is what is your debt in relation to your income, and we find a percentage. And in most cases, it cannot be more than 43.999%.
That's a big window, though. Would you say?
Not when you also, that 43.999% takes into consideration the amount that you're going to pay for mortgage, the amount you pay for property taxes, and what it costs to run your furnace to provide eating inside your home.
I see.
So quickly, it becomes a very small.
Yeah, I see now.
Right.
Okay.
So your debt burden has to be very low for it to work.
Okay.
Plus, apart from your debt burden being very low for it to work, you now have to demonstrate or convince the lender why is it that you have no money to get some skin in the game, right? Because, of course, we want you to be able to put something in, because that is like you're buying.
Yeah.
And it means that you now have something to lose too. Yeah. Right? So that you now have to convince the lender why you don't have any money to put down. So initially, I think this is my opinion, this might not be 100% fact, but this is my opinion based on what it is. Initially, I think this was designed for persons just leaving university. So you spend most of your money, you spend your money on going to school, so you're investing in yourself. Yeah. You come out now and you are expected that you're going to be making that money back. Yeah. So while you might have gotten a good job and your income and your credit might be up there, the down payment might be your obstacle. Yeah. So that is providing an avenue so that can be removed, right? So if you're working for 20 years and you come and say, I want a flex down loan, we're going to ask the question, why is it that you don't want to put any money down? Okay. And you say, I don't have any money. How come you don't have any money? You've been working for 20 years. Yeah. Even if you were saving $10 a month, then you should have some money, right? But based on the circumstance, we'll make the case. And then the lender will look at it and they assess the risk. And if the risk is not too much, then you can get it.
Thank you for that, Oral. Now, what are some of the biggest challenges that people usually face when trying to secure a mortgage in today's market? Challenges.
All right. Biggest challenge now after COVID is interest rates shot up. Right? So that has made things a little bit more difficult. Okay. Because, and here's the crux of the matter. Yeah. Interest rates are in the 4s now. 6 months ago, they were in the 5s. Okay. Right? When you come and I do your calculation as to whether or not you can qualify for a mortgage, say your rate is 4.69, and that's it. Say I can get you that rate. Yeah. When I do the calculation on your qualification, I'm gonna do it at 6.69. Okay. Because the law says, and based on the stress test, that we have to do the calculations using one of two formulas. Yeah. Either at 5.25 or at the actual rate plus 2%, whichever is greater. Oh. Right? So we can't do it at 5.25 because when you add 2 to 4.69, you're going to get 6.69. So now I have to now calculate whether or not you can afford this mortgage at a higher rate than you're actually going to be paying.
And this is all because of
2008.
Okay.
When you had that big meltdown in
Yeah.
the US because of how the mortgages were done.
Yeah.
People had mortgages that they couldn't afford.
Yeah.
So what the stress test does, and it's a good thing,
Okay.
even though we don't see it initially, it's a good thing.
Yeah.
What it does is that it assumes that if things get really bad,
Yeah.
and interest rates would go up by 2%, or things should go up where it equates to what interest rate is at if it went up 2%.
Yeah.
If you can still afford
Mm-hmm.
to buy this property based on the mortgage that you're getting, then you should be good.
Mm.
If something like 2008, that big crisis happened again.
Okay.
So while it hinders some people from qualifying, it protects you, because if things really went bad, then you'd be in trouble.
Well, we do hope there will never be another 2008.
We don't want it.
Because from what I heard, that wasn't a good time for everyone.
Definitely.
So with rising interest rate and changing in economic conditions, what advice do you have for potential buyers, our current homeowners looking to refinance?
All right. The best advice I can give you?
Yeah.
780-200-5229 or themortgagemc.ca. Get into contact with me because, all right, and it may sound funny and it may sound like I'm overselling or anything, but let me give you a practical example.
Please.
I had a client who I got them a mortgage. I got them approved for a mortgage, and we were like one step away from completing it.
Yeah.
But the client said to me that they wanted a mortgage from one of the big 5 banks. Yeah. Right? And they feel more comfortable doing that and all that, right?
Yeah.
And I said, okay, I can get you. But the client said, listen, I spoke to the big 5 bank, and based on advice from one of my elders in my community, I'm going to just go to the big 5 bank without you.
Okay.
I said to the client, is the deal that you're getting, the mortgage that you're getting, better than the one that I got for you? And when he told me the mortgage, I did a side-by-side comparison. I showed him and I said, listen, that's not a better mortgage. Okay. But he said, no, but what they're going to do, they're going to sweeten the deal. So they're going to give me a discount on the charges the fees that I pay on my accounts and my trading account and all that. And I said, all right. At the end of the day, I can only give you the best advice. You make the decision. Yeah. He went to those guys, right? Mm-hmm. Fast forward 1 year. Yeah. And, even though you didn't do the business with me, I still keep in touch because I build relationships. I just don't do transactions. Yeah. I give him a call and he said, boy, I'd planned to invite you and the wife over for dinner, but boy, it's been rough because my mortgage almost doubled. My mortgage payment almost doubled. Gosh. And I'm saying to him, so you mean that rate that you got, and I don't sell based on rates, right? Yeah. I don't do my work based on rates. I give you the best mortgage. I said, that rate that you got was even more than the one that I got. And it was a variable rate? And he said, yes. So I said, so didn't your mortgage specialist give you a call when the rates were about to go up and do like an analysis of your situation and then advise you based on that? He said, no. So, but I did that with all my clients who had variable rates.
And they're supposed to do that oral?
Well, if you're delivering superior service, that is a part of superior service. After sales, after I give you the mortgage, I just don't forget you and put you in as a number. Yeah. No.
Okay.
So when he said that to me, I told him, I said, listen, I had a discussion with every single client that had a variable mortgage with me because we saw the signs. We knew that based on where the inflation was, the rates would have gone up. We knew that based on how the bond market was, the rates would have gone up. So we had that discussion because, and that, my friend, is one other thing that we have that the big banks don't. We provide a personal touch. Yeah. Your win is our win, right? So if we can keep you winning at all times, we're gonna be winning too. Yeah.
Well said. Well said. For those looking to invest in a second property or in an investment property, what should they keep in mind? Because
all right. So usually investment property means 20% down, and I say usually. However, you can become a real estate investor without putting 20% down on a property, but this is what must happen.
Okay.
If you live right now in a property that you have bought and say you're gonna step up.
Yeah.
Or you want to go to a better community or whatever the reason is.
Yeah.
You can transform your current residence into a rental and buy a new residence and put 5% down.
Okay. So how would you go about doing that?
All right. Again, call me. But but seriously?
Yeah.
Seriously? So what has to happen is that because you're going to be converting the current property to a rental, what will happen now is that you can now use rental income.
Okay.
So rental income, we're gonna do the calculations to ensure that they cover the cost of the existing property.
Okay.
So we want to make sure that when we look at mortgage payment, property taxes, if you have condo fees, insurance, a little bit of maintenance, when we calculate that, if the amount that you're collecting for rent or the potential amount that you'll collect for rent, if that is greater than all those expenses, then basically that property is covered. So when we're going to look at your income and your down payment for the new property, what we are basically going to look at is that all your income and all of that will now go towards you qualifying for the new property.
Do there need to be evidence of that income over time for that to be successful?
Oh, you mean the rental income?
Yes.
All right. So if you're still living in the property and you're going to now buy the new one, what we do is what is called market rents.
Okay.
So market rents is done by an appraiser.
Okay.
They will look at, based on your area, based on the property, whether the number of bedrooms, the square footage, number of bathrooms, all the other stuff that you have put into it. They look at all of that, look at what rents are in that area and see whether or not your property will be able to demand that level of rent. And when they do that, then what the lenders do, some lenders will use 100% of it, some lenders will use 90, 80, 75, depending on their policies. And as long as that covers, and even if it doesn't, and your income allows you to cover it, then you should be on your way to getting a new property and using the old one to start your real estate investing journey.
I'll have to take notes after I edit all this film, because all this is just, it's all this information going into my head at once, which are actually, it's just absolute gems that I didn't know. Nevertheless, is it better to go fixed rate or variable rate? Because you started on that, and that's I have to ask you this question. Well, fixed rate and variable rate.
Everything that is good for you is bad for you.
Okay.
And choosing a fixed rate or a variable rate really, again, depends on the individual and your individual situation. Key factor is your appetite for risk.
Okay.
And I'm not chauvinistic or anything.
Yeah.
Right? Because I'm a feminist at heart.
If you say so.
Yes, I am. I have 3 sisters, right? So I'm a feminist at heart. Most of my female clients prefer fixed rates.
Okay.
You know why?
Tell me.
You give them one figure.
Yeah.
They know the amount.
Yeah.
They know whether they're locked in for 2 years or 3 or 4 or 5.
Yeah.
And they can now plan.
Okay.
They have that figure in mind. They plan and they fit it and they forget it.
So fixed rate is less risky, you're saying? Or would you say that?
It appears to be less risky for most persons based on your perspective, because everything changes based on perspective, right?
Yes.
It can, Another person will look at it and say, but if the rate goes down, my rate is fixed, so it stays there. So that's more risk.
Okay.
Right? But it's more stable, right? It's known.
But
there's no element of the unknown. And remember, I said what people don't know, they fear. Right? So lots of persons who just want to have one thing that they put in their plans and they set it and they don't have to worry about if it's going to change, and then they have to change 5 other things in order to make that thing work. Prefers a fixed rate. People who are mainly risk averse will tend to gravitate to fixed rates. However, if a variable rate is very, very attractive, no matter what your tendencies are, that can let you get over there. However, when it comes to variable rates, if the client is somebody that is always monitoring what is happening in the economy and the macro environment, and can pick up the indicators to know what is happening from time to time, then going variable is not a problem. I have recommended to clients to choose a variable rate over a fixed rate in the past.
Reason being,
at the time, variable rates were lower than the fixed rates, right? And in order for the client to qualify, we needed a lower rate. So in that case, whether you want to do fixed or variable, you can only have a fixed rate or a variable rate if you have a mortgage, right? So my first thing is to get you that mortgage. The good thing, though, is that with a good mortgage, there is provisions in like a very good mortgage like that, that you can switch from your variable rate to a fixed rate at any time.
Even before, because they normally give you a time period for fix, right? Like a 5-year or so.
All right, so your mortgage closed today and you got your keys and you got the house and the mortgage is funded. And tomorrow you wake up and say, I think variable rates are going to be going up very, very soon. And you call the lender and say, listen, my mortgage number is X, my name is Y. I have a variable rate and I want to switch to a fixed rate. They'll switch it.
Oh, really? Did not know that. So what factors affects my ability to be qualified for a mortgage, and how can I improve my chances?
All right. A number of factors will affect your ability to qualify and ways to improve it. All right. So factor, again, income, down payment, credit. Along with down payment comes closing costs. And closing costs is all those associated costs that will come with you getting a mortgage. Because say you have to pay for a lawyer to do the closing, the title has to be transferred, and you have to cover all those costs. You might have to pay for like title insurance. You must then do fire insurance. And you also might have to do like an appraisal on the property, depending on what is happening. And of course, all those costs you have to consider. One cost that you don't have to consider, though, is that when you go to a mortgage broker, we work for you, and we work for you for absolutely free.
And who pays you, Oral?
All right. Here's the beauty of it. I am paid by the lender, but you decide how much I am paid. Because the only variable that lender is going to use to decide how much I am paid is based on how much you are going to be borrowing.
I see.
So you have already made up your mind that you're going to be buying a property for whatever the price is, the sale price is. And you're going to be putting down whatever you're putting down as down payment. So what is left, that now decides, I am paid.
Thank you for that, Oral.
Definitely.
Okay, Oral, what should I consider when choosing a mortgage broker, just before we close out here?
All right. You want somebody that is invested in your success.
Yes.
You want someone that is flexible enough, that don't turn off their phone at 6 in the evening and you can't call them because as I said, the mortgage process is one that has highs and lows, right? And persons will have questions.
Yeah.
And if they want their questions answered and they're anxious and they can't contact you after 6 o'clock, then you're going to have a problem, right?
For sure.
So, plus, you want to ensure that you really, really, really keep on top of what is happening, not just in the mortgage industry, but what is happening generally, because everything impacts this industry.
Very true.
If bond rates are at a certain level, it impacts interest rates, and then it impacts mortgage and qualification overall.
Yes.
If the stock market is doing well, then persons who would bring their money to give the lenders to lend will then go to the stock market. So that will cause the cost of mortgages to go up. So interest rates will go up too, right? So having that understanding of what is happening will separate the average mortgage broker from the mortgage broker who is ready and raring to get up and to serve you each and every day. Sometimes the umbrella under which they work, and now in Canada you have brokerages that are franchises of other bigger brokerages, right? Sometimes the umbrella under which you work, because then the technology that is utilized and the access to lenders comes with that, right? So try tested and proven is always good. Try tested and proven, always good. Plus, you want to work with a broker that adds value.
That's very true.
Adds value.
So how can our listeners find you, follow you, or reach out to you if they're interested or looking to purchase their first property or properties? So
here's a good thing. If you go and you Google Oral McLean, you'll find me. If you go and you Google the Mortgage MC, you'll find me.
Are you on Facebook, Instagram,
Facebook,
TikTok?
Instagram, not TikTok. I'm thinking about TikTok.
Eventually, you might have to give that one a try.
I'm a marketer by heart, right? However, I do the research and I'm guided by research. And my research said at the time that wasn't the right time to TikTok. So the clock is ticking and I might just end up TikToking.
Well, thank you so much.
But no,
sorry
before you go. So I have my website, which is themortgagemc.ca. And it has all the resources there that you need. Again, Facebook, Instagram, and of course, 780-200-5229, the easiest way to call me. My working hours are nice and flexible. From I'm awake to I'm asleep. You can. And my clients will tell you, they can reach out to me via various methods. Email, it's Oral McLean at dominionlending.ca. And I usually respond within a relatively short period of time.
Appreciate that, Oral. Well, thank you so much, Oral, for sharing your valuable insights with us today. It's been a pleasure having you on the show called One Step. Before we wrap up, I think you have already listed a number of locations that you can be sourced. Thank you again for coming on the show. Audience, we ask you to hit the like, subscribe, and share this content. We do appreciate you. You all take care and bye.